Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm your host, Tshepo Modiba. In studio with me, Fungai Tarirah from Rudiarius Capital Management, and today we're talking Egyptian construction. Fungai, Egypt is quite a fascinating economy to talk about. Certainly on the face of it, you'd assume that economic performance would have been impacted quite negatively given the political turmoil over the last couple of years. But that hasn't quite been the case, has it?
100%. I think it's amazing how resilient the country has actually been, despite the turmoil that it went through over the last 4 years. But in the middle of last year, they eventually managed to get to political stability. They appointed a substantive head of the government who's come in with a very big drive as far as the economy is concerned. He's putting out a lot of these economic reforms which are boosting the operating environment for the country. But if you focus specifically on construction, it's just been an amazing market, right? They produce a lot of cement there. Roughly 51 million tons get consumed every year. To put that into context, South Africa consumes about 12.8 million tons and Nigeria about 21 million tons. So it's a very big market when it comes to cement, and they need more.
That certainly does put it in perspective. I mean, if we drill down to the broader theme, what are they constructing? I mean, if you're looking at Nigeria, if you're looking at other parts of the continent, maybe not so much Nigeria, but mining will be a big driver of construction in the continent. What is the focus? I know tourism is certainly a big aspect. What else in the Egyptian economy?
In Egypt, one of the biggest drivers is very basic. It's the need for housing. So the backlog, as many of the people there would put it at the moment, stands at about 1 million housing units. And each and every year, the demand comes in at about 350,000 units, of which only 150,000 are built. So that backlog continues to grow.
And I guess having such a young population helps in terms of that dynamic.
Exactly. So you'll find a lot of people are trying to get accommodation, places where they can actually live, but also government infrastructure is something that they're working on. So quite recently, they've announced a project where they're building a second Suez Canal and a city around the canal where logistics and warehousing space is actually going to be put up. So that's also a big requirement for cement. And they're improving the road network as well. Another 10,000 kilometers are meant to come through in the next couple of months of roads that they didn't have before. So all of these developments and all these announcements that have come out quite recently are making for very strong or robust cement demand at the moment.
Which makes investors in that particular space particularly excited. What is the competition dynamic like within the Egyptian environment?
So most of the cement consumed in Egypt is actually produced in Egypt. Where they do have shortfalls from time to time is clinker, which is one of the major raw materials that goes into cement. So they do import some of that from time to time, but the bulk of the cement is made locally. You've got a number of local players. Luckily, about 3 or 4 of them are actually listed on the stock exchange. So those of us not in Egypt can actually have access to those opportunities. And many of them are running at relatively high levels of capacity utilization. The immediate constraint is power. So the country is going through a mini power crisis. They're not managing to supply enough electricity onto the grid to meet demand. So you'll find that capacity utilization for some of the better producers is only around 80%. Of course, you'd like to see that number as close to 100 as possible.
So their constraints is the African constraint really in terms of power and electricity throughout the continent. In terms of, I guess, moving further upstream from the cement producers, in terms of the actual construction businesses, is there a similar robustness in terms of demand and excitement around that?
Yes, there is. And I think in recent times, one of the biggest constraints the property developers had was they didn't have access to enough land to develop the properties that they actually wanted to put up. Government has since changed some of the ways in which it actually grants land to developers, and in so doing they're unlocking a large number of hectares on which new buildings can actually be put up, and that has serious consequences, positive consequences for the real estate developers, because now they can actually roll out more stock. And they're doing so at fairly reasonable prices, which means that more and more people can have access to these homes, but also the companies themselves make a lot more money as they develop more and more of these houses.
So certainly another case of the political environment being supportive for growth and for businesses that are looking to tap into the Egyptian story.
100%, yeah.
Now, in terms of, I guess, the construction firms themselves, big competition there, or are you talking about a fairly concentrated industry?
It's fairly fragmented, but what you find is some of the larger scale operators tend to do large scale developments. So they'll buy 80 to 100 hectares of land, and then they'll develop that in phases as they sell off plan to people who need to buy on that. But what also happens is there are some smaller projects that actually take place as well. So you get some of the smaller entities, family owned, or just a couple of guys who've got together to start up their own construction company. So you find it's a very fragmented market, but at the same time, the large projects tend to be dominated by the larger operators who again are listed.
So over and above the, I guess, the residential aspect or the residential side, the residential drivers, which are quite exciting, any other segments in the economy that are likely to fuel growth in construction and cement in the broader sector?
Tourism, as you mentioned earlier, I think is also going to contribute to that. They've got a lot of coastal shoreline across Egypt, and they're trying to utilize more of that for tourism.
And I'm assuming the political environment of the last couple of years couldn't have been conducive to high tourism numbers, specifically in Egypt, and you'd expect with a little bit more stability politically that's an area that actually increases quite dramatically going forward.
Indeed it does. We haven't seen the numbers pick up to where they used to be, say back in 2005 or 2006, but we've certainly seen them come off their lows during the height of the Arab Spring or the Egyptian crisis that they were actually going through. So as those numbers steadily recover, the hoteliers are trying to cater to the increased numbers that they expect over time, and in so doing they're actually putting in new projects and new buildings to try and cater for that demand. You also find that government itself is contributing to that because they're improving the infrastructure that is used to access a number of these areas. So places that didn't have roads, hospitals, schools, all of those things are being built as well. And again, it's driving the demand for construction and for cement.
Now, in terms of funding for all of these great projects, where's the funding coming from?
Not so long ago, I think this last weekend, Egypt held a major investment conference where they invited foreign investors, basically, countries, companies from different parts around the world, and many of them pledged large amounts of money for the development of specific projects that they have interest in. Oil and gas and electricity led the charge, but right across the sectors you found a lot of companies and countries willing to support different projects for them to participate in. Added to that is the fact that over the last four and a half years, many Egyptian companies had actually stopped investing in their property, plant and equipment. So to do that, they're now going back to the banks to try and access funding. So there will be some debt funding, there will certainly be some equity funding, and a lot of FDI actually coming into the country. Loans to deposits in banks are sitting lower than 50% at the moment. So there's a lot of scope there for banks to actually increase the amount of loans they've got out there to try and fund some of these projects.
And certainly going through some of the annual reports from the banks, there's certainly they're looking at funding projects and looking at participating in this growth. So certainly, so funding is not an area that you should worry about.
I don't think so. I think the immediate constraint will probably be power, as we were talking about earlier. But as they solve the issues on the electricity side, you'll find that everything else falls into place quite quickly.
Okay, so we've spoken really positive. The one constraint you've touched on is the infrastructure in the form of power. Anything else that is potentially a concern for the sector going forward?
Execution risk is always something that one has to think about when you think about construction, and I don't think these instances we're talking about are any different. There's a lot more projects on the go now than they had, say, 3 years ago, 4 years ago. Do the companies involved have the capacity? Do they have the talent? Do they have the know-how to execute on that sort of level? So that's something to constantly watch. And of course, changes in the macroeconomic environment can negatively affect the cash flows that people are expecting from these projects, and therefore alter how they actually feel about doing that. But generally speaking, demand remains intact. Inflation is contained at this stage, and a lot of companies are feeling quite comfortable about the exchange rate at this point in time. So I don't think there'll be major risks coming up from there, barring something completely unexpected.
Now, in terms of the implementation side of, I guess, concern, I guess what they've done before is a great mitigator against that.
100%. They are experienced, but all I'm saying is the scale is now very different.
Agreed.
And the requirement to bring these projects through quickly has also changed. So in that, I think there's added complexity, and with that comes risk.
Sure. Now that's fascinating. So really the risks are what you'd assume would be the case in any environment where you're having a significant amount of upscaling rather than Egypt-specific risk.
I think the only Egypt-specific risk I could probably highlight is the unrest they're still experiencing in the Sinai region, where you still get insurgents attacking police or attacking civilians and bombing installations from time to time. So until that is completely taken out, I think that is a significant risk that is peculiar to Egypt, but it doesn't really affect the large part of the country. It's confined to that Sinai region, but I think we must flag it as something that is of concern.
Now, I guess my next question for investors is, are we seeing I guess foreign businesses going into the Egyptian market looking to compete with local businesses? Is that likely to be a trend going forward?
In certain sectors, yes, that is. So you get companies like General Electric. McDonald's has always been there, and they're very large there, and they continue to have a very big presence. Consumer companies in general, I think, are already looking at that market and trying to expand.
But not specifically in the construction space?
Construction, you find companies from places like Saudi Arabia. Arab Tech is actually working on a $40 billion project at the moment to try and put in 1 million housing units, and that is part funded by government. So where expertise is something that they really need to get, or where that foreign company has got a technological edge over the local businesses, that actually tends to happen. But for the most part, you find that it's a lot of local businesses taking advantage of all this opportunity.
That's quite exciting. So if I can sum up, so you're saying the country that's built or synonymous for building some of the greatest architectural sites ever, the pyramids, construction continues to be an interesting and positive theme for it.
100%.
Perfect. All right, we'll leave it there. Thank you, Fungai. Thanks to my guest, Fungai Tarirah from Rudiarius Capital Management. That's all from Buy Africa this week. Remember to follow me on Twitter, that's @Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. From myself and the team, goodbye.